Welcome to the Personal Pension Radio Podcast, where it's all about helping you complete your financial journey to retirement. Discover time-tested strategies and get unconventional insights into wealth building and retirement that actually work. Break away from the herd and go for the retirement you dream of. And now, here's your host, the income engineer, Kraig Strom.
All right, back on Personal Pension Radio. Looking forward to this episode. I really appreciate all the support. Once again, thank you so much for downloading the podcast. Please don't forget to share this with your friends. Share it on Facebook, share it on LinkedIn, YouTube, wherever you want to share it. I really do appreciate the support. Now, you heard the intro. I am the income engineer. Yes, I do have the registered trademark placard on my wall that says I am the income engineer. Broadcasting from my Personal Pension Radio workshop here in Southern California. My mission is to help you pull back that curtain and the mystery behind the typical mainstream financial advice around retirement and financial planning. I want to help you ask the right questions. This show is about building a relationship with a financial planner. If you really think about it from its core, when you listen to this show, it's an opportunity to build a relationship with a financial planner to get a perspective that is different, in many cases, than your standard financial planning conversation. And I hope it's helpful. Obviously, I would love for us to get together and work on your personal situation. But if you're working with a financial planner, if you're thinking about hiring a financial planner, I hope that this show will give you some ideas on things to ask, questions to ask a financial planner, perspectives perhaps to bring to that conversation from your side, because most advisors today have been educated by this same Wall Street machine that taught me. I mean, really down to CPAs, attorneys, bankers, insurance professionals, the list goes on and on and on. The advice is almost always the same. And it's incomplete, in many cases, just flat out wrong. It just bugs me, right? For example, every time you ask an investment professional, what's the key to building a good retirement account? Well, it's diversification and dollar cost averaging and blah, 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 blah. Well, diversification is oftentimes completely wrong when I look at investment accounts. Dollar cost averaging is a good idea. It definitely can work if there's a bigger plan behind it. But what I'm trying to say is that the same old advice is exactly that. The same old advice. And it has just not been working for a large block of the population nowadays. And I'm hoping to change that. If you'd like to have your own one-on-one with me, send me an email, Kraig with a K at kraigstrom.com. Kraig with a K at kraigstrom.com. Quick disclosure, I am not an attorney. I am not a CPA. I am a certified financial planning professional. And as good and qualified as I sound, and as many years as I've been doing this, that doesn't mean you should act on anything that you hear on my show or any other podcast, or especially any show where a financial entertainer is doling out advice with no real understanding of anybody's situation. A financial entertainer is someone like Dave Ramsey, who's not licensed to practice in the financial planning space, but under the freedom of speech and First Amendment, God bless America, he can give out sometimes the worst financial advice on 30-second sound bites. Please don't follow that kind of advice. Meet with a qualified financial planner professional first before you act on anything. And I would love that to be me. Remember, Kraig with a K at kraigstrom.com. Quick shout out to listener Greg. Listener Greg brought me the question and a point this week about currency, the U.S. dollar, and the hype and the scare that's out there and some of the marketing pitches about the U.S. dollar. And he also made a great comment, Greg, about my YouTube channel. Yes, I do have a YouTube channel. No, I don't pay close attention to it because the YouTube channel is really only allowed to be used to put out the content from this podcast. So I am endeavoring to work on actual video content for the YouTube channel. Thank you for the feedback. Now, I do have a deal of the week this week. This season has turned out to be my season for conference trips. We actually partner, my law firm that I work with, we partner with other law firms, and one of those law firms specializes in the real estate lending space, and I had to go to a conference in Vegas. I'm not a Vegas guy. I don't gamble. I don't drink. Vegas is generally lost on me. So here's this 2-day conference. I got to be in Vegas. Well, the location of the conference was the Cosmopolitan Hotel. The rooms were $220 a night. That was the cheapest room I could find for the conference, was $220 a night. I just can't stand that idea that I'm going to go rent a bed for $220 a night. So I whip out my iPhone, I open up my Kayak app, and sure enough, I get a hotel just down the street, literally like 3 minutes away, right across the strip. I stay at a hotel for $95, including parking. $95, including parking. The room was clean as a hotel room can be. Let's really face that, okay? Right? You're renting a bed, and you kind of just want to sleep in the bathtub most of the time, even if you're in a fancy schmancy hotel, right? So I ended up, for $95, I got a nice big clean room, and that was a savings of $125. That's a 57% discount just by whipping out my Kayak app on my phone and spending just a minute, really not more than a minute or two, right? That's the deal. What's the difference, right? Both hotels have a casino where I can smoke a pack of cigarettes without buying my own cigarettes, right? You have to walk through the hotel casino to get to an elevator or to find a restaurant or anything, right? Both have exit doors that lead to every other hotel on the Vegas Strip, right? And then finally, I just booked my stay for the next conference coming up in October in Miami. Got a 2-day conference I need to be at in Miami, Miami Beach, and the same deal. The location where the conference is, the hotel was over $220 a night. So $220 a night. I pulled out at this point, an Airbnb app. So I went to Airbnb because all the hotels were over $140 a night. So I pulled out my Airbnb app, and I found a studio apartment, a studio condo, 7 minutes away from the conference, walking distance, 7 minutes away from the conference for $98. That's $122 savings by pulling out my iPhone. That's another huge win, right? Another huge win just by taking a quick sec and checking it out. That's my deal of the week. Now, I'm curious, if you have a deal of the week, I'd love to share it with the audience. It can't just be me out there saving money on stuff. If you've got a crazy good deal, send it to me, Kraig at kraigstrom.com. I'd love to hear it. Now, the first segment, watch your step. Last episode, I talked about this tax deduction marketing pitch that is around IRAs and 401ks, right? I talked about people that the whole idea that 401ks and IRAs, they are not tax deductible. They're tax deferred. A true tax deduction is one where the IRS doesn't come back after it someday. Remember, when you have $1 million balance in your 401k, it looks fantastic, but you only have $700,000 in there because $300 of it belongs to the IRS. So go back and listen to that episode, please. I talked about this tax deduction marketing pitch and the idea of having too much cash. Definitely go back and listen to that. I thought I got some good feedback on that. Now, the question that came in from listener Greg that I gave a shout out to earlier was this idea around various marketing and pitches and messages that are out there in the world about the US dollar crashing to zero. And be ready. What happens if the dollar crashes to zero? Buy gold and silver and be ready to jump in your bunker, right? The sky is falling. Okay. This is scare tactics. Scare tactics in the best way that I could describe them. This is my take on these kinds of scare tactics. I know there's 100 different arguments out there, 1,000 different arguments out there. Oh, watch out. It's all big, bad, and terrible, right? But listen to this. Depending on the source that's referenced, because I looked it up and I always research this stuff, and there's 100 different sources. So let's just say, depending on the source referenced, about 64%. So listen carefully. 64% of all currency in the central bank foreign exchange are held in U.S. greenbacks. 64% of all the money in the foreign exchange reserves are held in U.S. dollar bills. The world has 185 currencies, according to the International Standards Organization. Most of them, that currency is only used in the country of origin. 185 countries or currencies in the world, and most of the time, those currencies are only used in those countries. The next closest currency on the global scale in the foreign reserves is the euro at 20%. So remember, the US dollar is 64% of the foreign exchange reserves in the world. The next closest is 44% below that in the euro, which with the Eurozone in turmoil, that number is surely getting smaller. Bottom line on this, the US dollar is the dominant currency on the planet by a huge margin. A dominant currency on the planet. Not just a little bit, but massive. If the dollar goes to zero, that would mean the collapse of the world economy, and no amount of gold or silver will make it all better. At that point, you'll be better to have your doomsday bunker stocked with plenty of top ramen. Okay, folks? The idea of the dollar going to zero, could it happen? Anything could happen, I suppose, right? And the idea that the dollar is no longer the dominant U.S. currency, all right, here's my take on that. If you look at the United States position in the world economy, folks, think about this on a big scale. The United States gross domestic product stands at about $18.7 trillion. $18.7 trillion. A massive number. The next closest gross domestic product number is China. They are $7.5 trillion behind us. Fully 40% ahead of China. 40% ahead of China is the United States. And then below that is Japan, 4.9, Germany, 3.7. Did you hear that? That the United States is at 18.7 trillion. Japan, Germany, and the United Kingdom and France, all of them combined, don't even come close to the United States. My point, folks, again, that in order for the United States currency to fall to zero, the United States would literally have to fall down below China, below Germany, would have to really fall tremendously in the economic standings of world domestic product and production. And it's just, that is not a possibility barring a cataclysmic event. And a cataclysmic event, right, something that would change those numbers, is going to be something that the currencies will all be destroyed. I mean, it's just something that it's not going to be something simple where the dollar crashes to zero and then everything kind of rolls along and now we use the yuan as our primary currency. Well, that's just not going to happen. Something it would be in horrible, horrible situation. Okay? So please keep this in mind. The pitch and the hype around the dollar is going to go to zero, it's going to crash. That's a great marketing pitch for buying gold. It's a great marketing pitch. It's a scare tactic, but I guess it's a great marketing pitch, right? So please, watch out for the sky is falling kind of marketing pitches. And that's my take on it. If you have a different take, absolutely send in your comments. I'd love to hear it, right? Don't forget, freeze your credit. How many times do we have to hear another data breach, another major medical care provider, insurance provider, financial provider losing data, right? The chances are your data, your social security number, your birthday, your credit card numbers, it's already out there in the wind. It's out there. There's just so much of it. Your identity hasn't been stolen yet. Freeze your credit, folks. It's easy to do. It's easy to thaw. Send me an email, Kraig@kraigstrom.com. I'll happily send you back the links to freeze and unfreeze your credit. Now, listener questions, and I've got a quick rant to finish up this week. But last episode, great question about choosing a financial planner, right? Choosing a financial planner, and it's important you go back and listen to that episode. If you are wondering how the heck do you choose a financial planner, go back and listen to the last episode. I definitely gave you some feedback on how I look at it. Please do that. Now, this week, listener Josh here in California asked a great question. Josh asked, should we go solar? Should we put solar panels on our house? Right? Great question. Here's my quick and dirty answer. Only put solar on a house if you plan to actually stay there. So many people are jumping around and moving on their houses nowadays that if you're not planning on staying in a house for 5 years or more, why bother? Let someone else put the solar on there, right? But if you're planning on staying, definitely something to consider, especially here in Southern California, where we have some of the most expensive electricity in the country. Right? The most expensive electricity in the country. But now here's something to consider. If you can, buy the system instead of leasing the system. And if you can buy the system, buy it with financing instead of simply paying cash. Now, you can pay cash. Sometimes the math will add up where you pay cash, and it's a good cash-on-cash return when you eliminate your electric bill. I'll explain that in a minute. Now, using an equity line on your property, not a bad idea. Nice long-term financing, and you're really adding some value to your house. So an equity line can work. Sometimes it's a good idea to take advantage of a solar company offering a 0% introductory offer, for example. There's a lot of that, plus tax credits and various things. But financing is almost always a good way to go, depending on the cost of the system, because there are many, many companies to choose from, and they do offer a variety of financing packages, healthy tax incentives, right? Because when you look at it in California, the average solar panels, right, as of July 2018, they cost about $3.18 per watt. That means for the average sized 5 kilowatt residential solar system, it's supposed to cost around $16,000. It's about $16,000. And if you get a tax credit, you get maybe another $4,000 off of that, right? So after claiming back the tax credit, the average monthly payments on some of these systems can be $100 a month. And you've got zero down and all these various things. You could be cash flow positive immediately, even with financing, right? So what about paying cash? So just here's a quick example. So you think about this. If your average electric bill is $350 a month, right? $4,200 a year, right? And if you paid top dollar for a full-blown solar system plus, listen carefully, this is the big fail on solar. You've got to have a battery backup system that runs all of your electrics at night. That's where the power companies have changed the game. People get solar, and they've now changed to usage billing and time billing. They charge more at night because they know you have solar. Them buggers. It gets you, right? So you got to get a battery backup. They're called power walls. Tesla actually is a brand name on Powerwall technology where you can have a battery charging system that fills up batteries in your house, and then your house runs off the batteries at night. So you're really off the grid. So let's say that you spent a whopping $37,000 on a solar system. I went big for this, by the way. It doesn't necessarily cost this much, but let's just say you spent almost $38,000 for a solar system and a full power wall, meaning you've got battery backup. You're not on the grid at all anymore, right? Well, if you think about it, your average electric bill was $4,200 a year, and it cost $37,500 cash if you paid cash, right? Well, $37,500 sitting in your bank account earns you squat nothing, right? Well, if you paid $37,500 for a solar system with a battery backup system and you paid cash for it, and you eliminate $350 a month, that's effectively giving you a $350 a month cash flow on your $37,500, right? That's 11% cash on cash return. That's 11%. That is awesome. Okay? That is actually something to think about. Now, if you get a 0% financing deal or an equity line, the actual rate of return, if you can keep your cash in your pocket and use a bank or a finance company to finance the option, the rate of return cash on cash could be even better. Okay? So that is my answer on solar. If you can pay for it, buy the system. If you can finance it with a great deal, even if it's a short-term great deal, and then switch over to an equity line. You can pay cash even if the numbers add up, right? When you look at the numbers, you look at the cash-on-cash benefit of actually paying for it, that could work. That is something to definitely think about. Talk to a couple of different solar companies. And Josh, I'd love to hear what your numbers are because I'm actually curious about it for myself. My power bill is considerably lower than yours, and maybe the numbers might still pencil out. Now, a rant. I have got a rant about this. This just drives me insane, okay? I met with a new client this week, literally just yesterday. These folks were introduced by their attorney, a business attorney, because during a meeting with the business attorney, they were complaining about taxes. And the business attorney says, well, what is your CPA doing? And they said, well, we do this and we do that. And the attorney was a smart guy and said, you should talk to Kraig. Kraig's the income engineer. Kraig also, in doing that, he specializes in tax planning and investments and insurance. He does all that. You really should talk to him. So I am introduced by this attorney to this really nice couple that started I'm telling you, folks, this is the American dream. This is where, when I hear people say, "Oh, I can't get ahead in America," and blah blah blah, and there's no opportunities, and the system is keeping us down because we're this and we're that, bull crap. Absolutely bull. I talked to a couple like this that are minority Americans that started with nothing, absolutely nothing. They worked so hard. Just getting to know them just inspires me personally to work harder. But they started with nothing, with, according to some people in this country, all the disadvantages that never let people get ahead. Total hogwash, because these people actually worked really hard and they took advantage of all the opportunities that are here in the United States, and they have built a tremendous amount of wealth. They own multiple restaurant franchises. They own real estate. They have done so well together. It's just amazing. And they're raising 2 awesome kids, right? So I start the conversation with this couple by asking lots of questions, including, what have you been thinking about? What keeps you up at night? Well, the big one is they know tax season is coming again. We're only in August and September of the year, and they're already stressing about the conversation around taxes, right? And the big advice they had gotten from their CPA for tax planning was, if you're paying taxes, well, you're making money. What? That's literally what their CPA has told them. Well, if you're paying taxes, I guess you're making money. That's a good thing. I was just floored. You can hear it in my voice. I'm still floored. If you've got a CPA out there that is not proactively strategizing tax planning for you, you have got to get a new CPA. Oh my gosh, that is unacceptable. The idea that, you're making money, so that's okay, right? No. These folks today, listen to this. Their big advice from their CPA was, you should fund your IRAs. You should put money into IRAs. Well, that's $13,000 a year. That saves them a few $1,000s a year in taxes. Really? That's the big advice? People ask me why they've not heard tax, financial, and legal strategies that my team offers. Simple, because they haven't met me. They're currently working with an average advisor. It's not meant to be a slam on anybody. There's a lot of folks out there that all they need is a good, average, basic, run-of-the-mill, mediocre financial advisor or CPA or attorney. And yes, I just said it. There are lots of mediocre attorneys, financial planners, CPAs, just average, run-of-the-mill, good, basic stuff. And there are a lot of people that's all you need to pay for. But these folks have grown up and built this amazing business. And unfortunately, their advisors, their CPA, right, never grew up with them, never learned anything more than basics. And that's what they still have. Folks, this couple, their whole world has been completely rocked by the conversation with myself and one of the attorneys on my team. We met with them yesterday. We laid out very high-level discussions about the tax strategies and legal estate planning strategies and that they're going to have in place if they work with us, right? And they were blown away, absolutely shocked to find out that no, they do not have to pay the level of taxes that they have been paying. It is unnecessary. And I'm saying this for you folks. If you are paying big taxes every year and you love it, great, good for you. But if you pay your tax bill and it makes you mad, we should talk. If you're not getting strategy advice from your CPA who is partnering with a financial planner and a lawyer, that's the magic 3, right? The trifecta of good financial advice is your CPA working with your financial planner, working with your attorney. You put those 3 people in a room together, your taxes can change tremendously, folks, right? taxes are voluntary. There are a lot of taxes and a lot of situations that you just can't get away from. You know what? You're just sort of stuck. But I'm telling you, I meet so many people that get into this situation where their tax and legal and financial planning people have never evolved as they've grown. If you're hearing this and it's resonating with you, we should talk. Send me an email, Kraig@kraigstrom.com, Kraig with a K, @kraigstrom.com. And I'll say this, that I've said this now, I think, more than I've ever said it before. The rich don't pay taxes. And the question I get then is, well, why not? They're scamming the system, right? No, because they know people like me. That's the truth, right? They know people like me that are 20 years in this business that have surrounded themselves with the best of the best CPAs and financial planners and attorneys and have never stopped learning and strategizing and getting better and advancing my position to help my clients, right? You can find hundreds of thousands of financial planners that are still doing what they did 25 years ago. They've never evolved. That is not me. There's a very small percentage, a small group of financial planners, CPAs, attorneys that have continued to never stop learning, that we always get better. We're always looking to challenge the questions and the standards that are out there to find a better option for our client. If you're not working with that CPA, if you're not working with that attorney, right, or that financial planner, I want a shot. I want an opportunity to meet with you. Tax season is upon us right now. And if you haven't had a strategy conversation with your financial planner or your CPA or your attorney to pay less taxes, send me an email, Kraig@kraigstrom.com. I am here. I love to help. I am anxiously awaiting the contact. Please, that's going to wrap it up on my rant. I need to go take a nap again. Please share this episode with your friends. If you've got a friend that you think is in this same boat with taxes, share this podcast episode with them. It's just as easy as whipping out your phone and sending them the podcast on a message. It's super easy. I really look forward to the next episode. Please keep all the questions coming. I love to riff off those questions. Thank you, Greg and Josh, both for sending in your feedback and your questions. I'll talk to you again real soon. Take care, folks.
Thank you for listening to the Personal Pension Radio podcast. We took notes for you, so if you missed any part of the show, you can find a full transcript of each episode at personalpensionradio.com. Be sure to download your free retirement income crisis report at personalpensionradio.com. While you're at it, we would appreciate some iTunes love. Please leave us a fantastic rating on iTunes by going to personalpensionradio.com/iTunes. Thanks again for listening. Now for the disclosure. Information presented is for educational purposes only and is not intended for solicitation, sale or purchase of any security or financial product. Be sure to first consult with a qualified financial advisor and your tax professional before implementing any strategy discussed here. The term personal pension refers to a marketing name designed to educate future retirees and retirees about the economic principles behind creating their own pension-like income. The term personal pension is not intended to be confused with a defined benefit pension plan offered by an employer or by a government entity.